Can you hear me?
Yes, got you, Michelle.
Yes. I don't know why my
Hi.
volume is so low. I can barely hear.
Can barely hear me?
Yeah, I'm trying to figure out.
Because
Um,
you're loud and clear.
all right, speak again.
You're loud and clear.
All right, I've just checked. I just raised the volume on my computer. That helped a lot.
Okay,
Um,
good.
should I
Um,
share my screen?
sure. We have to see the picture speaks 1,000 words, although
Okay.
I could
Um,
speak 1,000 words.
all right. You should see my computer
It's
now.
coming up here. I just want to, before we get going, Michelle, I just want to tell you I've read your autobiography. I found love on the floor, the trading floor.
Well, yeah, a few
I enjoy.
times.
I really enjoyed it. Just want to
Well,
let you know. Anyway,
thank you.
so what are we looking at here, my trading warrior sister? So
Well, first of all, I just want to
family,
say good morning to you and
good,
to everybody.
good morning,
I
Michelle.
showed up an hour ago, and I was like, thank God I wasn't ready, so I'm
Yeah,
ready now.
okay, great.
Yeah, well, what do I see? Well, I mean, I don't want to repeat what is obvious. The market is, people have been calling it all different kinds of things, tale of two markets, et cetera, et cetera. And clearly that is all accurate, but it's not very helpful if we're here to make money. So
Right,
we've been really trying to separate all of that noise, all of the news, the COVID news, all of that stuff, just move it out of the way and look at pure price. And that doesn't mean that there aren't risks all over. But the interesting thing about the market is that after the initial rally, and let's just take NASDAQ and take it off the table here for a second, and Tesla, take that off the table.
okay,
The actual inside of the market is really where I believe people have to focus and to see what's going to be next, and not listen to all the talking heads, because it'll make you crazy. Of course, here we are talking heads, but the other talking heads.
yeah,
Um,
everyone but us.
well, we're trading. I mean, we're
Yeah,
not just talking heads. We're not
that's
just
true.
talking. We're,
Great
talking the
point.
talk. We're walking the walk, right?
Yeah,
So, and
yeah,
we've had a phenomenal year because I had certain themes in my mind that I did not let go of, and you're going to know, exactly what that is. I've been focused on commodities,
commodities.
gold,
Yes,
silver, miners for months, even before this year began.
right.
And so that's really where 35% of our portfolio has been in gold. And so today, of course, seeing it come up again, we're actually going to start taking a little teeny profit here because, as traders, you want to sell into the exuberance, but keep your position and raise your stops. But you don't want to just get out because we don't know what's going to happen. And the gold is the perfect reflection for all this uncertainty that you're hearing everybody talk about. So I just wanted to put that aside. But what we're looking at here is XRT. So to me, I like to focus on the Modern Family. That's my
Yes.
creation.
Hmm.
And XRT is granny retail, not Amazon, not iBuy, but actual brick and mortar retail. And what's interesting is you had two bankruptcy filings today. Oh, goodness gracious, I'm not going to remember which stores it is,
Pennies.
because I read it about an hour ago. But nonetheless, if you look at the fundamentals in terms of the brick and mortar retail, it's been terrible. But yet, at the same time, the technicals have been very interesting in XRT, which is why I consider this to be the key. So what you're looking here is my 4-chart screen, and up here
Right.
where my cursor is now flying is the 200-week moving average. This is better than what Grandpa Russell is doing, the 2000s. It's better than the transportation is doing. And it's definitely better than what the financials, particularly the regional banks, are doing. However, it still lags semiconductors, of course, Superwoman off to the races,
Right.
and biotechnology, which also peaked in 2015 until this year. So I'm watching retail carefully from a fundamental reason, because let's face it, we are still a consumer-based economy. And regardless of all the bad news, the market's forward thinking. Maybe they think that the consumer is going to come back in some big way, or this could be some aberration and it starts to sell off. And then I would get a lot more bearish at this point. So it's pivotal, extremely pivotal. As long as granny retail holds up, it gives me the best hope that the market will hold up. If it fails, sayonara market. It's probably going to take, I don't know, down to the lows, but I think we could see, a good move down, a good solid 10 to 20% move lower. So there we
Michelle,
are.
can maybe you could help me, and people that are not in our business, that are just looking at the world around them. I get this question all the time. I'm curious if you do and how you answer it. They'll say, Dale, we have unemployment levels we haven't seen in our lifetime. All the obvious things that are being reported, and we need relief money, and PPEs, whatever they are, to bail out the economy. Why is the stock market going up in this environment? How do you answer that? Why is the market going up with what's happening to the real economy?
Well, I can say it in one syllable.
Fed?
Fed. The Fed. Well, that's
Yeah,
two
that's what I
syllables.
say. They don't understand that, though,
Yeah, I
when
mean, the
you say
Fed
that
has
to them.
made, okay, so to explain it to people, the Fed has made a commitment to backstop the damage from what happened with COVID-19. And they've
Right.
made that commitment, and kudos to them. They've actually somewhat succeeded. And I say somewhat, which is going back to gold, while gold is flying. Because in essence, what they have done is created a potential monster unless we actually really do get through COVID and things actually do start to improve and they can reduce the balance sheet. So when the Fed came in and added all that money, and the government, by the way, also helped and
Right.
gave money to people, companies, of course, there's been a lot of bad stuff that happened with that, like finding out that billionaires were also getting stimulus checks. But the point is that the plan by the Fed was to make sure that they can catapult, or at least cushion, the inevitable fall that was going to happen from the businesses closing down and the economy virtually stopped. Did they succeed? Jury's out. But
Right.
again, I can't say it enough. What's going to be the implication? So we have burgeoning money supply, obviously. We have
Right.
interest rates low, zero. They're
Right.
saying they may not go negative, but they could if the market can hold here. And this, by the way, is not just in the United States. The entire European zone also did its very, very big share of money supply and stimulation for their particular economies. And so right now you're in this situation again, where if we can't come back with some real solid numbers, I mean, we all know that it was awful in terms of what happened with unemployment and businesses closing and bankruptcies, et cetera, et cetera. And you're going to see more bankruptcies come out for sure. But we also know that that could be temporary, and that's what the market has. Besides the Fed, it has hope.
Oh,
And nobody really
kind
wants to see this market crash. Where this is
no.
America. We like to be
Yeah.
bullish in our companies and our stock market.
Okay. Okay. That's a very good explanation. So after you do that, do people say, "I understand," or they're still shaking their head? Because it's
People,
almost like you have to. Yeah.
well, I think people do understand.
Okay.
I do. I think that I've seen plenty of people who think that the worst is over, and plenty of people who think that we're really going into the crapper. But
Right.
there's really, to me, the biggest fallout of this is going to be what I've been talking about for months and months and months, like, also, which is stagflation.
Right.
And that's where the education comes in for people, because you and I were around at the time in the 70s, but a lot of people were not, or if they were, they weren't really paying attention, except when they found out in 1980 if they wanted to buy a house, they had to have a 20% interest rate.
Yeah.
But
Yeah.
what happened in the 70s is very parallel to what's happening now. Couple of differences, because it all got spiked with an oil crisis that we had in 1973 after the Yom Kippur War, and then we had
Right.
the embargo on the oil, and oil prices went berserk. So if we take oil out of the equation, essentially what happened was the economy stagnated and raw material prices started going up. At that point, the interest rates were low. We were ending a Vietnam War. Nixon was, already getting into doo-doo with Watergate. I mean,
Mm.
that's where the parallels kind of were. The
Okay.
dollar was down, but not really all that weak. People think this all depends on the dollar. It does, but not for the reasons why people think. The big thing about the dollar, and I'll get back to the stagflation in a moment, is not so much that we need a weaker dollar to see gold go up. And I heard a comment about that before, because the dollar and the relationship to gold has varied, and also to the market. If you look, there is no real rule on that. The biggest problem with the dollar is if, and this is a big if, we actually start to lose it as the currency, the world reserve currency. That is the disaster play for us as in the United States. And we have to hope and pray that doesn't happen, because our empire will be really at risk. So what we're hoping for here is that the dollar can fall, but not to a point where, you know, the other countries like China, for example, and India and all the countries that still trade in US dollars stop doing that. That to me is the biggest risk with the dollar. But going back to stagflation, even a weaker dollar it can spur it, but it's really, I think, a food-based stagflation that we're seeing occur.
Interesting.
And let me put up a different
Okay.
chart for you, because we've looked at granny retail long enough. This is DBA. I'm not necessarily saying you need to trade DBA, but you know what? Let me give you even a better one than this, because I'm going to give you a different chart that I think you're going to enjoy seeing. PDBC. Okay, this is probably the better chart to look at. This is the Invesco commodity fund, one of them. There's a ton of them, but this is one of them. And I like this one because I'm showing this one lately, because this is really good for people who don't want to trade things like DBA, because it deals with their K1 issues in their accounts. This does not. But really what you're looking at
What's
is
K1 issue?
the K1s, you know, for their taxes and stuff. They
Oh,
can't
okay.
trade certain instruments.
Yes.
DBA is one, soybeans, the ETF for that, SOYB,
Got
corn.
it.
Most of the
Okay.
agricultural commodities, they cannot trade because of their K1 issues. This
Okay.
one actually circumvents it. But more importantly, look at the base we're forming here. So we reached a peak low. When I say peak low, this was the low back in March when the whole market crashed at 1108. And
Right.
now look where we are currently. This is a weekly chart. We had the
Okay.
gap down,
Yeah.
where the other instruments, like I just showed you, retail is nowhere near the high of, let me go back to retail just so I can show you what the difference is.
Yeah.
The high here is still pretty far from when the market crashed. If we go back to the other instrument that I was just showing you, PDBC, we're actually taking out that high right before the crash. See that?
Okay. That last candle gap down was that was the crash.
That was the crash. Yeah, yeah. So
Okay.
now what we have here is this incredible looking base, and we haven't quite broken out yet on a weekly basis. We would have to really close above 1251. Looks like we may actually get there. Let me just make sure that's the right number. No, excuse me, 1321. By the way, my assistant's walking in, so you're probably going to hear my dog bark for a second, and I'm
Okay.
going to apologize in
That's
advance.
fine.
If we close above 1321, look at the gap to fill here at
Yeah.
1380. We
Yeah.
fill that gap. That I think would mean that any dip thereafter should be bought. We're already long certain commodities, but this is where I see the stagflation really coming from. Gold is actually relaying it on one level. Silver, by the way, would be another place to be watching. Silver is still, relative to gold, underperforming. It's coming in higher today at 1731. This is probably the gap to follow. I would follow this gap, wait a couple of minutes, maybe 5 minutes, maybe even 30 minutes after the open, and then follow this gap up, because this is the first gap we're seeing in silver that's taking out all this work that we've had here. When the silver starts to outperform percentage-wise the gold, that's inflationary. We go back to that other chart showing that the food commodities are bottoming. If you take a look at soybeans,
Yeah.
they have been bottoming, even though it's 15 bid at 1475. We don't know where it's coming. It still looks like it's bottoming. If we take a look at sugar, which you know is my little secret sauce,
Yeah.
which is not so secret anymore since I talk about it all the time. But if you take a look at that, this is the daily chart. Look at that
Yeah.
beautiful bottom here. all of this signifies to me that this is really where the best play is for the second half of 2020, as that is in the food commodities and the agricultural commodities and the food commodities. The gold is telling us, the silver could be telling us, certainly the interest rates are telling us, the dollar is telling us, but from a fundamental standpoint, we also have food supply disruption. We have deglobalization, which means countries need to hoard food. We've had some crop issues. Any
Right.
kind of major drought we have this summer will only add fuel to that fire. We have a lot of reasons to believe not only the fact that we go to the grocery store, we all see food prices higher, but in terms of
That's
the
what I was
metro.
going to say. The man on the street could certainly relate to what you're talking about right now.
Yeah, and
As they,
has.
yeah,
Right. I mean,
okay,
the big save, the reason why inflation hasn't really been talked about much is because the oil prices are still relatively low. But if we're moving more to a clean energy, solar energy environment, look at the prices there. They're starting to go berserk. So maybe we're just seeing a major sea change in terms of where our energy focus should be. And I think that would be great for the environment. But certainly looking at oil as the big tell for inflation, I think is putting blinders on.
okay. Yeah, there, in fact, Goldman Sachs, I believe, had a commodity index that was with gold or with, I mean, without oil or with oil. They may
Hmm.
have taken something out because they felt it was distorting it, but
This is the Goldman Sachs one that you're talking about. This is their
okay,
commodity index,
okay,
GCG, and
okay.
it looks kind of similar to the other one I showed
It
you.
does.
But this has a certain components in it for sure that relates to, but not heavy in the metals yet, or it would be much higher. But look
Right.
at that. This also looks like, the base, it's holding. This dotted line you see right here, that's an exponential moving average on a weekly
Yeah.
basis. Hasn't been above that since the beginning of the year. Right now we're holding
Threatening.
above it. So you
Yeah.
got another thing to look at, a weekly close above 1055, let's say. Not only takes out all this work, but it clears and closes above the exponential. That tells me that it's anticipating commodity prices could go much higher in the agriculturals for sure.
Okay. And you've been there before. Isn't it interesting that when cycles repeat, you could recognize it if you've lived through it, and you lived through it,
Absolutely.
so it's an edge, isn't it, Michele? I mean, a lot of people weren't trading back then.
Well, and it was 40 years ago. So people don't even think about what can happen. And now, that situation is on steroids because of the central banks and the Fed. This is, I hate to use the word unprecedented, it may be the most overused, hackneyed phrase we've had in 2020, but it's applicable. And going back to sugar, by the way, what I didn't mention before is that sugar actually went up to 60 cents a pound in the
Yeah.
mid 70s before gold took off and silver took off and the food commodities took off. It was kind of this weird, that's why I say it's the secret sauce. It was kind of this weird tell that if people are paying that much for sugar, which is in basically everything during bad times, which people will turn to sugar during bad times, especially lower socioeconomic groups, but everybody, that was
Yes.
my relay. And that's why I've been so focused on that sugar market.
Okay. Yeah, and you were talking about it a year ago
I've been
with
talking about this.
us.
I could see this coming. I was early to the game, but that's okay. I rather be early and be prepared, and which also meant getting a little bit ahead of myself. Well, but soybeans. I'm going to go back to soybeans. Soybeans. We've actually been in and out. We've made a little smidgen of money. Now we're actually making good money because we got in down here, right when it was starting to
Hmm.
push against the 50-day moving average. So now, we're well in the money. We have a full position. We have a protective stop that will actually lock in money. But I'm
Isn't
really
there a
hoping.
crop report this week? I believe a big crop
USDA
report.
report came out last week.
Oh, last week. Okay.
Yeah, and the big thing about the crop report last week was that corn, another one that's basing, had a lot less plantings than previously. So if you add that all together, of course, there would be less plantings. I mean, for many reasons, you know, the fact that there aren't that much, you know, in terms of labor as there was, but also because you cut back production when you have an overproduction and your price is full. You know, it's interesting. We look at corn. Corn is the first commodity that was ever traded for hedging for farmers. This is why the whole commodities market was invented, was for farmers to be able to hedge somewhere for good crops and bad crops in a futures market. So it's a little history right here. So the corn, if you really want to watch the original kingpin of commodities trading, watch the corn market, which of course is also now in a recuperation phase above the 50, above the 10, obviously well below the 200-day moving average.
Those aren't priced in bushels. What's the pricing there? I mean, you know, corn I think is 350.
Yeah,
So
let me take a
what
look at the
does
corn.
1247 mean?
This here is the ETF, and the reason
Oh,
why I
okay.
show the ETF is because a lot of people will
Don't
not.
trade futures.
Yeah, they're not going to trade futures. It's they don't understand it. It's a dangerous game, et cetera, et
Oh, it's
cetera, et
going to
cetera.
be, they're going to have a ton of corn delivered in their backyard for the barbecue.
Yeah, and in the cash, July is trading 342.
Yeah.
Yeah, so I don't know. Let me see. I'm just trying to see how it's priced, because I don't even remember. I can tell you about oil
I
and
think it's
sugar.
about $3, 3.5
Yeah,
bucks.
exactly. So
And
it's
anyway,
342.
I think that our viewers would find your your look in your lower right hand corner. Maybe you could spend some time talking about how the floor trader pivot works. This
Oh,
looks interesting.
absolutely. Oh, that's, you know what? You're one of the few people who has ever asked me to talk about that.
Well,
So
you know,
one of the
I just
things,
read the book. I found love on the floor,
I,
trading floor.
as I said a few times.
All right, so were you using these kind of pivots before the exchanges were converted into bowling alleys?
Right. Well, you know, I didn't know about floor trader pivots back in the day. I was doing point and figure charting. I was just
Okay,
doing a series of X's and O's that looked kind of like a football field, you know, when
yeah,
the coach is planning the moves.
right.
So we've gotten a lot more refined through the years. So these are common pivots. Every single trading platform has floor trader pivot, which is a midpoint pivot, which is what you see here in gray, and then has resistance 1, resistance 2, resistance 3. On the flip side, support 1, support 2, and support 3. And these are mathematical calculations, and they work really, really well. I think that you probably would see the algos looking at them as well. And so one of the things that we use them for is really two things. One is we like to look at the stack of the actual floor trader pivot or the midpoint pivot. So if the stack is negative, so here's a perfect example going, let's use corn as an example, or we can look at something even more volatile. Let's put up SPY.
Okay,
Let's look at something that's a little bit more interesting. So with SPY, if you look at, this is just going back to June 24th right here, you know, we had positive pivots, negative pivots, and then a negative pivot here, and it opened up above R1. So if we have negative pivots, we like to see R1 hold. It's not perfect, so that's why we use a combination of things, but you can see that what you would think in the morning when this gapped up over R1, that meant that this was going to continue to go, and it did for a little bit, but not that much, and then it failed by the end of the day R1. So if you're a day trader, you would say, oh, after coming in with negative pivots, taking out R1, I should buy. But then you would look at R2 and you would be more encouraged maybe if it cleared R2 that it was going to go
right.
further. But then as a day trader, you would probably sell once it broke R2. And if you kept anything by the end of the day, you would gotten out of the rest of it at R1. That's day trading. Then if you look further, you can see we had negative pivots, and here we got up to R1. So the next day we had positive pivots. We also use it for a 30-minute opening range breakout.
Okay,
So the first bar, every bar represents 30 minutes. So in this case, on the 30-minute OR high was at 305.38, we probably would have been a buyer over R1 at 306.28, And look at that move now that you get. You get the follow
Hmm.
through. So you may get
Yeah.
the fake outs like this and make a little money or lose a little money from a day trading standpoint. But if you are doing that same day trading consistently every day, if you bought after the positive pivots and the R1 breakout and the 30-minute OR breakout, you would have done very, very well. So now let's move to today, or coming into today. So yesterday we couldn't get through R2. I mean, that was 2 days ago. Then we
Yeah.
gapped lower, but we held S2
Yeah.
initially. Looked like it was going to go. Let me see if I can pull this down. You can see it up here, but it never cleared R1. And then,
Right.
of course, it broke S1 and then closed under S2. So now coming into today, I don't have forward-thinking pivots, but the market is about to open, right?
Yes.
What you would want to look for now is to see, A, if it can clear back over the floor trader pivot when it opens up, and then B, if it can clear back over R1. If you just want to trade it just for information, that would probably mean something very good for the overall
Do you
market.
use it to trade both the long and short side of the market, or just for
Absolutely.
longs?
If I
Okay.
wanted to go short, um, let's see. Well, let's look. This is an older short. This is an older short because I'm just trying to think off of. Mylan was something we went short back here when it broke down in the weekly. It broke down under the daily, etc. But let's just use Mylan as a good example, going back a little bit in time here. We go back a little bit in time. If you have negative pivots, here's a classic example, okay? If you have negative pivots like you have here, and it gaps down, and it takes out that first bar under S1 in the 30 minutes, you've
Hmm.
got a good opportunity to go short. And look at that, you
Okay.
had a nice short there until it started consolidating. So to me, the pivots are really good. They're like part of the navigation system. It's
Okay.
not the only part of the navigation system, but especially if I'm looking to establish a new swing position. Let's take a look at one we put on yesterday. And I tweeted about this, so I don't mind showing it. Space, one of my favorite stocks for a buy and hold type of situation, which I barely ever say. I never utter the words buy and hold. But I really like this company and I really like this stock. So yesterday, it came in with slightly positive pivots, right?
Hmm.
But it actually didn't do very much. And then another thing I'll do is if it breaks down under that first 30-minute OR bar, which the low was 1343, doesn't break S1 with the positive pivots, comes back and trades back above that floor trader pivot, I will buy it. That's called an opening range reversal. And that's what we did. We got in at 1650 yesterday. Oh, excuse me, wrong day. I'm doing this again. Here it is. Came in with positive pivots, held S1, cleared back over the floor trader pivot, and we got in. And so that is
Interesting.
another way I'll use it to enter a swing trade.
That's
So
a
now we'll see where it
interesting
opens.
technique. Yeah,
Yeah,
I've
yeah.
heard you
And
talk
this
about those opening range trades before.
this is the market gauge specialty, and it comes
Yeah.
back from the floor days in
Right.
futures. They would open up the market, one by one by one by one. So
Right.
it would be, here we are in
Right.
July, so July would open, and then August and September, October, November, and then they'd close it down, and then they would reopen all the months together, and then you got your opening range. Oh, and here we go. Okay, so we're here. So let's take a look while we're here at SPY. Okay, so now if we take a look at where they open in the pivot, since we're doing a little pivot lesson here, SPY is under the floor trader pivot. So right now, unless it takes out this floor trader pivot here and a 30-minute opening range, that's what you'd want to look for. Come on, come on, come on, come on. It's about 315. Let's just round it off. If it can hold here on a 30-minute OR, take out 315, then I would say I would certainly not have a negative bias for the day. I would have more of a neutral to positive bias for the day, just based on the pivots.
Okay. I
Okay, and
have a
here's,
question. Do you
sure,
use Tradestation as a platform to trade these commodities and stocks?
yes, yes, I
Okay.
use
There you go,
Tradestation.
Paul.
Yeah, yeah.
And Sarah, yes, there is a recording of this you could find later. Why don't we go to how people find you? So
Ah,
if they want to pursue this and learn about this, um, I know you also are a great teacher.
well, thank you, Dale. Well, first of all, I'm on Twitter at Market Minute. that's really where I do most of my work in terms of for the public to see. And actually, gold, tweeted about last week that it was the last dip in gold to buy, and it turned out to be the case. It's trading at 170 right now. In fact, I have to send an alert out to my people to tell them to take a little profit here, because that was my profit target. You
Okay.
can also go to our website, marketgauge.com, see all of our products there. I have a product called Mish's Market Minute Advantage that I not only teach and coach and do a couple of videos a week, but I also send out real-time alerts when we get into a trade.
You
So
want to
you will
show your website?
yes, let's show the website here. Let's get out of, let me hold on, let me get into my website. And so that is another great place to talk to us. And if you want any kind of, oh wait, hold on, it's not going to move over here. Let's see if I can move this over. You know what I'm going to do? I'm going to stop share on this one, and I'm going to share
There
a
you go.
different screen. Here we go. All right, that's my website. There's me. And there's my book, Plant Your Money Tree. And we have all different types of products and services, from quant models to tools to education to discretionary trading, which is really what I am right here. I'm the discretionary trader. And what's great about this service is everything I talk about, I teach constantly. But more importantly, you can also just do what I do. I give you real-time trading alerts with stops and targets, and then I keep track of that trade as the trade moves on. And then, of course, I'm on LinkedIn and Instagram and Facebook. And lately, I've been posting.
Stockcharts.com.
Stockcharts.com has been a big one. Every
Yeah.
Thursday, I do a half an hour full on. Here's what
Yeah.
I'm watching. Here's why. Here's your actionable information. And also, if you go to my media page, I've been all over, interviewed by lots and lots of people, including yesterday, TD Ameritrade. So I'm pretty easy to
Nice.
find.
Yeah.
You can't miss me.
And you're getting the exposure you deserve, Michele, and really keep up the great work. And it's great to have you as a resource. And I'm glad you've become a regular here on F.A.C.E, and want to wish you and Keith and your family safety during this, and that pips keep raining down on you and the family.
Oh, thank you so much, Dale. And we wish the same for you. You're such a good guy. And we go back, me and Dale,
Yeah,
we go back.
we go back,
We go back.
and you know what? It's most important. We move forward, Mish. So
Exactly.
thank you so much for hanging out with us again for half an hour, and carrying on with your theme that you've been very correct with on accumulating commodities for a stagflationary environment. I really like that theme.
Well, I hope to see people make money that way in an area that most people don't think about, especially if they've been equities traders for the last 10, 15 years. They haven't
Yes,
even thought about it.
it's still good to have you and me and just a few others that have survived the commodity baton death march,
Yeah,
and
and
we'll
here, by the
know.
way, here's your gold. Here's your gold chart right here.
Yeah,
So we have a nice
eight,
little open right here. So,
yeah. Okay,
okay.
well, thanks again, Michele, and you could follow Michele at Market Minute on Twitter. Find her, and she's a great resource and ethical person, and that's more important than what was your best month. So thanks again, Michele. Everyone, remember, don't just count your pips, count your blessings. We'll be back with you tomorrow. Good hunting, and that's a wrap. You're very welcome, Monica. And yes, I will invite Michele back again.
Thank you.
See you, Michele.
Bye-bye, Dale. You
All
take
right, bye
care.
bye. Bye bye.